Good morning, ladies and gentlemen, and welcome to the show. Today is September 11th, 2019, and there's been a lot of predictions about what happened to the market today. Listen, I'm going to tell you what. Today's going to proceed. I haven't opened the markets yet. I haven't checked them yet. They open in exactly 1 minute from now. Anyway, I haven't checked the pre-market yet either. I just don't think the market's really going to do a whole lot today. The market's kind of in a waiting pattern. Uh, we've got big events coming up. I think Brexit is going to have a huge impact on the market when it comes. I think it's going to happen. I think Brexit's really going to happen on the 29th. I think it's going to have a huge impact on the market. But, the higher the market goes on this end right now, the bigger the crash is going to be that's coming. And, there's instability in the markets right now. Let's open up the charts and take a look at this instability. Let's get started first with the silver price. And, the silver price has fallen a little bit today. But, I told you guys 17's the floor, I believe. And that was when it was up around $19 and like 30 cents or whatever. I told you guys that we were probably have a little price correction, and I said I thought $17 was the floor. Well, we're getting down close to the floor. We've dropped 7 cents on the day so far, and we're looking at around 18 bucks. 17.92 bid, 18.02 ask for silver, but the price is falling right now. Let's take a look at gold. Now I said gold. I said the floor was 1475. We're getting down close to that too. 1487, but it's up $2.10 supposedly on the day, but it's falling right now. 1487 bid, 1488 ask on gold. Now let's move on to cryptocurrencies today. Now I'm going to tell you something about cryptocurrencies. There's massive money out there right now in the system, washing around. And what I mean washing around is running from one place to another. It's looking for a home. It's looking for yield. It's looking for an investment that's safe. It's looking for safe haven. It's looking for a lot of things, this money. It's been chasing yield big time, But this money is looking for a home. It's out there washing around in the system. Let's take a look at something real quick. Someone just moved $1 billion into Bitcoin. Nobody knows why. Just pow. $1 billion moves into Bitcoin. Just like that. It says this is one of the largest Bitcoin transactions ever. Evidently, 94,505 Bitcoins, valued at over $1 billion US, and one single transaction just moved into Bitcoin. Well, I see money coming out of the bond market. Big time, and maybe this is the first player. It's just moving it out of one market, moving it out of the bond market, moving it into the cryptocurrency market. And this is just one player, but what if a whole bunch of them start to follow suit? Because we've seen a massive amount of money move into the bond market quite recently, drove bond yields down super low. And now I was talking about that to you guys on my channel. You're privy to that information that I said that the bond market was probably look for a snapback, I said, in the bond market. Well, I still hold to that. The US 10-year, watch it most carefully. If it goes over 3.25%, we are in danger of a market crash. And I still hold the 3.25%. Now, it's fell so much lately, that, well, what is it right now? US 10 years at 1.73. People say, oh, it can never go to 3.25. It could snap back to 3.25 in no time. In a matter of weeks. In fact, moving like it's been moving, And now let's take a look at the Dow Jones for today. It's off 4 points. I wouldn't call that a crash. Okay, it's down 14 points on the day so far. I'm not gonna laugh though at talks of crash, because I'm gonna tell you what. I mean, this market is been pumped up to the moon, and it's ready to crash. And if it goes higher, it's even going to be more ready to crash. You know, it's not valued properly. It's been pumped up with free easy money from the Fed, for the longest time. But that free easy money is getting to the point now where it's like pushing on a string. It doesn't have the effect that it once had, you know. And basically, the way to describe it to you guys is, you all know what a colander is. When you got hot spaghetti cooking on the stove, a big pot of hot spaghetti, and you pour the spaghetti into the colander to drain all the water off. The colander's full of holes. Well, the financial system at one time was like a hot colander that didn't have hardly any holes in it. There wasn't graft. There wasn't people that were on the take. There weren't all these criminals. All these criminals within the financial system now are like holes in the colander, and they keep adding more and more holes. Well, the money that they pour in is like the water that comes into the colander. Well, it's getting so now that the money is, they pour it in, that runs right out through the colander as fast as they pour it in. But they can't stop. They have to keep blowing up these bubbles. They have to keep the system inflated. Proof of that, well, we're going to continue to work through the markets. It's down 14 points right now. Now it's down 4 points again. So it's the market's kind of in a holding pattern right now. Let's take a look at crude oil. 57.50 right now. Now let's take our serious look at U.S. Treasuries. I flashed here a second ago when I was talking about the U.S. 10-year going over 3.25%. I still hold to that. That's the mark to watch. 3.25 on the U.S. 10-year, and if it goes over, if it exceeds that mark, I think it's gonna bring on a market crash. And we are bouncing back fast. That 10 years is risen 2.8 basis points today alone. I think that the yield curve, on the long end of the yield curve, the Fed doesn't have any control over that. Investors have control over that. They've been marching in big time into these bonds, buying up, snatching up bonds like crazy. But the bond market is in a super hyper bubble. And I mean, it can bounce back in the opposite direction. And if it goes too far, on the 10-year specifically, I've marked it at 3.25%. Goes over 3.25% on the 10-year, we could get a sudden market crash in the stock market. That's something that I'm watching very carefully. Now let's take a look at the U.S. dollar index. We see the dollar's on the rise today. And this is why it's having an adverse effect today on the price of gold and silver. But I think there's a floor under silver at $17, and I think there's a floor under gold around $14.75. I don't think we're going to break to the downside of that during this price correction. But what I'm watching for now is an explosive move to the upside with gold and silver. That's what I'm watching for. And I see it as being something that's imminent in our future over the course of the next number of months. An explosion to the upside. But it's also, I think, going to carry over into the cryptocurrencies. But I think gold and silver this time are going to catch a bigger upside than the cryptocurrencies are. I think they're really going to move when they start to move, gold and silver. It's something to really get excited about. This little price correction that we're having right now is starting to make people think, oh, it might go back, silver might go back down to $14, and gold might go back down to $1,200 or something. Put those thoughts out of your mind. I think those days are over. And if you didn't buy in when it was at those prices, you should have. I mean, I was on this channel and I was talking about gold and silver, how it, well, you've missed the boat, basically. I don't think you're going to see prices around $14 for silver anymore. I think now, I think this little price correction we're in right now is actually really nice. It's nice. It gives people an opportunity to enter in at an entry level price, and it's nice. It's actually nice, but I don't think it's going to last a whole lot longer. I mean, it's a period in time that's going by, You know, let's take a look now at China. Now, this is the reason why that period of time is going by for gold, silver, and cryptos. Is look at China here. They've got a choice to make right now between the gray rhino, which is feeding the system, continuing to feed the system with money, or the black swan event, the threat of an economic slowdown and a crash in their markets and everything else. We all know which direction they're going. It says Beijing changed its course to cope with slowdown pressures. They're going to stimulate. They're pumping money into the situation. Now, you know, the central banks over here are going to do the same thing. It says Beijing's policy balancing act may have come to an end last week when the People's Bank of China announced that it would pump an estimated US 121 billion of additional liquidity into the banking system. You know, if they don't do that, the Chinese economy would crash. They have to. And the same thing's going to apply to the West. Our economies are going to crash if they don't pump and stimulate. And eventually, it's like the colander that's full of holes. They have to keep doing more and more. They have to keep dumping more and more stimulus because it's running right out through the colander. All these crooks within the system are gobbling it all up. You see these guys. You see them out there. Rich, fancy guys driving their Lambo, you know, while the rest of all of us are suffering. They're in the money pool. You know, they're being fed by the cheap, easy money. And this is why the colander is full of holes. Each one of these crooks represents a hole in the colander that lets all the money pour out. As soon as they dump this new stimulus in, it pours right out the other side as fast as they dumped it in. This is an intolerable situation, and it's going to lead to hyperinflation ultimately in the conclusion of it. But they can't let it crash into a deflationary event because it would take them out too. And they know that. That's why they won't let it go deflation. That's why they're going to keep pumping it up with air. They're going to keep filling that bubble until they bring the hyperinflation. Eventually, savers all across the world are going to start to realize, hey, what am I saving money for? You know, and the same thing with even these big guys, the guys that represent the holes in the colander, these one percenters. They're going to start to try to put their money into hard assets as well, rather than keeping it in. I mean, it's just human nature. Once it hits a certain point where people realize, the realization starts to dawn on them, hey, you know what? Cash is no good. I want my money in hard assets. Then there's going to be a chase for goods and services like you've never seen before. They're going to come rushing in, and they're going to buy everything that they can buy with their money as soon as they can buy it because they know the price is going to go up tomorrow. This is basically where we're going with this. And ultimately, in the end, it leads to a hyperinflation. It's that hyperinflation that brings a real crisis in the conclusionary stages of the hyperinflation. That's when the reset has to come. The reset's going to have to come, and that reset is going to be back to making money worth money again. They have to back it with something. They have to use something to back the money with, something that has value separate from the fiat currencies, like gold. They have to back it. Gold's the perfect thing to back a currency with. Then your currency has value again. You know, then people will want to save it again because it has a gold ratio. But, you know, they're going to have to reprice gold massively higher in order to do that, based off the currencies. And so, when you hear these guys that saying $10,000 gold, don't snicker and laugh, because that might be severely underestimated compared to what gold is actually worth in the end. Listen, thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.